when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here, approximately 10 a.m. in Honolulu, Hawaii on Monday the 9th day of May, and this is the Daily Report. We have gold trading about $17 higher, currently trading just off the highs 1512 to 1513. We are looking at our daily chart in candlestick format, and as you can see, I want to continue from the discussion that we had on Sunday or yesterday. It is my current belief right now that as this market came up, this is 2 to 3. We went into our corrective phase. I believe that our corrective phase will be a 3 count. It will simply be composed of an A, a B, and then a C. And on today's report, the first thing that I want to look at is absolute targets that we feel comfortable with, that have strong potential in terms of where we think the gold market will go. Typically, when forecasting a B wave, we use A as our benchmark, and you will look for that market to go anywhere between 50% and 75% of the A wave. So this is what I'll call our window or target here. Therefore, on the low end, we would look for this market to go to roughly about 1520. If it stalls there at that point, it would probably go into our C and our final corrective wave before we restart the engine on the impulse side with a major wave 5 and a intermediate wave 5. That is going to be quite a ride. Now, when we look at this market, we did, of course, get stopped out with a very large drawdown last week. At the same time, we did re-enter the market, and we got what I believe to be a very, very solid position, because we're in at 1488, roughly in this area here. We now have some profits in the market, and we will talk about moving our stop up later on this week. For now, what we want to focus on is, as this market comes and begins to trade back up, we want to pay very, very close attention within these guidelines. In other words, it is my belief that we'll start to see the market trend higher. I also believe that we have an opportunity and should in fact see this market go back and test this one area here and get at least to, as I said, around the 1520 point. At that point, we want to see if there is anywhere within this particular area where we see it finding some absolute resistance, because this is that window that we want to look at. At that point, it is my belief that C will be either truncated or flat. I do not believe we are going to see a full retracement, and I personally think that the lows we hit at 1461 will probably remain the lows. We are currently looking at a 2-hour candlestick chart. It eloquently illustrates the kind of activity that we have been witnessing recently. We have a set of double tops here, of course, 1577 being the high. The market comes down, it makes a low at 1461. That is over a $100 move. From that, we have seen the market genuinely take off running. It's currently trading on the highs at 1514 and has been running solidly since the low that we saw back on the 6th of May. So in terms of our upside target, we're looking at a 240-minute chart, and once again, this was our A wave down. My current belief is that we are currently in our B corrective wave, which is a impulse wave to the upside. What I am noticing is that right in this area, this is that 1520, 1519, you can see that we had a first set of tops right in here, and therefore I believe that that will possibly be a very, very strong candidate in terms of an area for us to see a conclusion of the B wave. From the B wave, we will have one final C wave down. As I have said before, I don't believe that that is going to be a very harsh wave. I do believe that we have already witnessed our lows here and that we will either get what's called a truncated or what's known as a flat, in which it returns to the 1461. My personal gut feeling is that 1461 is an area that we have long passed and that we will not see, at least for the short-term future. Traders, obviously we want to maintain our position and we will be looking to move our stops up. The areas that we're going to be looking at in terms of placing our stops are going to be below certain points. One is right in this area, which is the 1490, and if we see some of these highs begin to form, we will want to place it below these lows here. We'll look to do that over the next day or so. So if and when this market does in fact approach our target, the 1519, 1520 area, we are prepared to either get out at that point or trail our stop up much tighter. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily report. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange